and made it computerized, and so it made it a lot easier for us to do this trading now that we have this, we're trading in decimal. So that's really not going to be the case here, bothering us. It's Jim Chanos was on, who's one of the best hedge fund managers around, and he said it's a minuscule tax that we pay, and he said it's pennies. He says we don't consider anything like that, but if people have an edge and they exploit it, I don't see anything's wrong with that. Maybe I'm totally off base here, but I don't think it affects us. I can look at these charts, and this high frequency trading's been going on for a long time, and I watch these numbers on these charts, and sometimes they hit so just like magic that it really is, that's what I'm looking at. I want my edge is, whether these Fibonacci numbers and patterns that I look at are going to work. They're never perfect, but they work a heck of a lot more than when they fail. So that's the bottom line. So I wouldn't be too concerned about it. And when they talk about it being rigged, it might be rigged, but not from the way we know it. When you've got a Federal Reserve in there that has $2 trillion that they pulled out of the air, and they've got several hundred traders trading on inside information all the time that we don't have any idea of what's going on. Now that would really be the R word. The other stuff is nothing. That's nothing. They say it's 50% of the volume on the stock exchange. I find that hard to believe, but if that's what it is, that's what it is. At least that's why the volume is up so much. I don't know. We'll have to wait and see. Okay, back to business. Okay, we started the show today by looking at the XAU on a daily basis. We've come down and we hit the 61% retracement 6 days ago. We've had a little bit of a rally of about 2%, not very much, which is a little bit concerning because you would expect a market that had come off to a 61% retracement to have a pretty good, rally off of here, and we were not even able to take out the highs of the previous week as of yet. It's still quite early, so we want to watch that, but we certainly don't want the XAU to go into new low grounds below $90 a share now, because that would really damage the bullish case, for the precious metals. That's the opinion of what I'm trying to show you here. Now, what I'd like to do is to switch over to silver for just a second to show you what I'm trying to show, because when these things fail, they fail very, very badly, and we know that. There's nothing there's nothing new about that. But we're going to take a look at silver now, and we've been waiting for this level of $19.70 to be hit since March 31st, and that was Monday, and here we are on Thursday. 4 days later, we hit that 970 spot on. We got to 965, and we made a little bit lower low at 959 on Monday, and since that time, 965 has been the low. But the problem, 1965, excuse me, but the problem is it hasn't rallied very much. Here again, we made our low back at the end of last week, and we should have had a really strong rally coming out here because we had perfect squaring of price and time, coming together at this level down here. And so this can still work, of course, but the caveat that I'm bringing to you here is that if this thing happens to break down and goes below the 1940 level, we're going to be looking at a potential move in silver that would be down several dollars, because all we have to do is to go to the long-term weekly chart here, and you can see that from the high we made way back in 2011 at almost $50 an ounce, that we could have another ABCD coming down to $17.75 per ounce, which is $2 per ounce from where we are right now. We could easily get to that level. That would be equating gold getting down to probably the, it's 1287 right now, so you'd be a couple $100, so around $1,000 an ounce in silver if we were to do that. So it's important that we hold this 1950 level per ounce in silver, based on that, because as you can see from this long-term weekly chart, we could easily go down to that level if we break, because it's been a perfect move, just like we had expected to come in at that 1970, and we're going to know very, very shortly here if it has the strength to hold in that level. There is absolutely nothing in the market that makes us look like we're able to see anything with the volume or open interest. There's nothing popping up. There's just the volume and open interest hasn't changed anything for weeks and weeks. So there's just a lack of interest in this market. More than I think I know the reason for that is everybody's buying stocks. That would be my guess. So it's very important here that we hold these levels in the silver market, because if we don't, we're looking at something that is quite ominous. So we want to take a look at the gold stock that we've been watching, and that's American Barrick. That's been a good mover here. And if you'll just give me 1 second, I'll put it in here and we'll be able to take a look at it. It's been a very nice stock. It follows the patterns and the ratios. And here again, you can see the ratios that we've hit in American Barrick. And regardless of high-frequency trading or not, it still goes to these patterns and ratios. They always have and they always will, because it's all part of nature's law. You can go back as far back as you can get recorded data, and you'll see if you can see a chart, you'll see these patterns and ratios present. There's the things that make it move. So American Barrick must hold $17 a share, in my opinion. But so far, it's been a really good correction coming off of the 2150 level. And as long as we can keep American Barrick above that $17 a share level, it still looks like it has the ability to have a pretty good move, to the upside. I still think that gold has a really good chance of going up. We've had a pretty good spot here recently coming in. If you give me 1 second here, we'll put up the daily chart first in gold, and then we will move over to the next one. But we've come down from the if you'll notice, when we made the ABCD, back in December, after we did that, the market had a pretty substantial rally of about $50 or $60 per ounce very, very quickly. Now, we're only the second day into the low, so it's still way too early to tell anything about that. But the market rallied from 1177 all the way up to 1392 over a 2.5 month period, and now we're down in just about a month here, and we're right near the 50% retracement. So that would tell us, where we are as far as the retracement of what we're looking at that point. So I think that the gold here has a chance at the 1285 level as some type of a minor bottom in here. But we also have the potential that gold could get down to the 1264 level, which is the 61% retracement of that whole move from December, all the way up into March 17th, which was that St. Patrick's Day full moon that we had. And of course, we've had the new moon just occurred here on Monday, and we're 2 days into that. So we'll have to see what occurs at that point. Someone asked a question about the Ukraine and the war and stuff, folks. I don't, that nothing happened before. I mean, the market rallied stock market rallied like crazy right in the midst of that. So I don't think that has anything to do with it. I think they know what's happening there already, and it's pretty much built into the market. That's the way I look at it. I don't think there's anything there that's a surprise. What's really surprising to me, folks, and it's not, not many people talk about it very much, but we've had 4 major earthquakes here into this new moon here in the last 5 days. We had 2 big ones in California. I mean, 5.2 is pretty big, especially if you're in one. And then we had that monster one in Chile, which is 8.2. That's a huge, that's tsunami type stuff. Luckily, Chile is way up in the, it's got a very high altitude in there, so not many people are going to be, affected by a big tsunami, not like it was in Thailand where everything's at sea level and it just wiped everything out. And then we had another one yesterday in Panama. So we've had 4 major earthquakes, right over this this new moon that we're having. And the reason why is the new moon in a conjunction has greater gravitational pull than any other time, and that caused the tectonic plates to separate a little bit. So that's the main thing of what you're looking at. I have never been to Chile. I've been to Peru, but that's it. So we got the Dow down just a tad right now, and gold is up a little bit.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we have a question, someone about the XLE, which is the energy sector, I believe, and they asked me to take a look at the pattern, and we have that same pattern that we've been watching in other things, which is the reverse point wave, where each of these moves up, and we are right at the 1.618 as we speak. I'll post that in here to look at it, but this has been the strongest, and it's up strong today too, but I think this is getting to the spot where it's getting ready to have a little bit of a problem. We have a very large ABCD going back quite a few months that's completing right on time today too, at the right around the 90.50 level, and it's trading around 90.40. So that's what it looks like in the XLE, the energy section. And I'll cover crude oil, but we've got a caller coming in right now from Singapore. Philip, are you there? I would believe it would be William. It wouldn't be Philip.
Oh, yeah.
Maybe it is William, right?
Yeah, I thought I didn't even open my mouth.
Well, I'll tell you what, William, you're the only friend I have over there, so I knew it had to be you. It couldn't be anybody else. What can I do for you, my friend?
Yes, I thought maybe I would like to ask you, regarding Tesla.
Yes.
Tesla, if you look at since the day we reached a high at 265, I take that one as point A.
Yes.
And on 14th of March, I take that as point B. I'm not sure whether is it all right if I take 19th of March as point C, and then I will get an ABCD target field at point D on the 27th March. And I'm not sure whether that explains the reason why the target has been fulfilled, and that's why we are seeing the up move now.
Well, I'll tell you what I'm going to do, William. I'm going to post in here because it looks like me the A leg was up at that 265. The B leg came in around the $200 level. Then we had a 50% retracement over the last 5 days, and to me that sets up a what I think will be an ABCD move, sharply to the downside, taking Tesla, down to the 172 level. That's what it looks like to me. I'm just looking at it from a perspective that the rally back only went to the 50% level. Okay,
understand. So that means I take the point B too early, because my point B was occurring around 220, 225, 26 level. So I think that may be too early to take that as a point B, right?
Yes, that's correct. I know you were short up there in that 265, so you must have made a few bucks on that one. So
not too bad.
That was good.
I was thinking whether should I, start, going on long position right now, because
I would not touch the long side. If it gets above 235, I might, but I wouldn't touch it here. Not after making that 50% retracement over 5 days. I would be very careful.
Sure. Okay, I got it. now.
Thank you very much. Thanks for calling in, William. You bet. Bye-bye. We've got a caller from Las Vegas, Nevada. Larry, are you there?
Yes. Hello, neighbor.
Hey, it's nice talking to you again. How's things over there? Are you still betting on for the hard way?
No, there's a much better market to bet on.
I know, I'm just teasing you.
Yeah.
What can I do for you, my friend?
I have a question about harmonics, and then I have a comment about your Astro dates coming up.
Sure, go ahead.
When you're trading the Gartleys and bad patterns, how close to those, say in the Gartley 61.8% retracement, how close do you have to be before you consider that a true pattern? In other words, if you just waited for exactly 61.8, you wouldn't be trading too much. So,
well, the reason why is you won't get filled at 61.8 because it only hits there for a few minutes, and that would be the high or the low of the move. So usually I shade it by somewhere between $50 and $100 when I'm looking at those.
Percentage-wise, what would you say?
Excuse me?
Percentage-wise, would you call a 63%?
Oh, percentage-wise, I think you could do 2%, or actually 1% when you're using a stock, and you should be okay. So if you've got a $50 stock, 1% would be $0.50, and so I would think you'd be okay there.
No, I meant percentage-wise on the Gartley retracement, the Fibonacci retracement. It's the 61.8, but would you...
61.8. Well, I usually usually is 0.57 on one side and 0.70 on the other side.
Oh, okay.
But for trading purposes, those numbers are not really very relative because you're only talking about a couple $100 here and there, and you've got to risk that on any trade that you're doing. So it usually doesn't mean too much. Larry, stay with us. We got to pay some bills here, okay?
Sure.
Okay, thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back with Larry. Are you there?
Yeah.
I'm not talking to myself. This is somebody else, correct?
Completely different person.
Okay, what can I do for you?
Just to finish up on the harmonic patterns, when you're looking back on your charts to patterns that have already completed, going back to that 61% retracement on the Gartley, if a pattern retraced, say, 60% or 59%, at what point would you look back and say, oh, that's a Gartley pattern, if it wasn't quite the 618?
Well, there's two things got to happen. I either have to have a really good ABCD there, or I've got to have it's pretty much spot on to the 61 or 786. Now, there's an occasion where you get an ABCD at a 382 when the market's really strong. The same thing at 50%, but you hardly ever see 50%. That's a number that is right in the middle, and the market's always expanding or contracting, so you don't see 50% very often. That's equilibrium, where it's usually expanding or contracting, and that's what we're trying to do, is define those expanding and contracting numbers. So they got to be pretty close. If they're not close, give me a call, and I'll try to help you. But usually they're usually pretty much spot on the patterns that I'm watching.
No, we're only a couple of weeks away from this Astro date you've been talking about.
Yeah, the 21st, 22nd of April.
Right. And I read an article yesterday on RT.com. That's the Russian Times newspaper. I don't know if you've ever gone.
Oh, yeah, I read the Russian newspaper daily because I speak Russian, Chinese, Japanese, and Swahili, all very well. So I never miss the Russian paper.
Well, yesterday, I don't know if you saw it, there was a very interesting article about Yellowstone. And
I saw the documentary on Yellowstone and what a hot spot it is. Yeah, I'm aware of that.
Well, there's unusual activity right now happening up in Yellowstone.
Oh, brother. Well, we don't want to hear that.
Well, there's a lot of tremors happening, and it's not being reported by the U.S. Geological Survey. But the most interesting thing about this article yesterday is the video that's embedded in the article. And it shows a person in their car driving down the road in Yellowstone, and it's a very flat area you can see for miles.
Sure.
And you see an endless line of bison, not walking away from Yellowstone. They're in a gallop, and the caribou, the moose, they're leaving the area. There's something going on there, and it just got me thinking about these astro dates and the possibilities of what could happen. And if we had an eruption up in Yellowstone, which, boy, that hasn't happened in millenniums, this could be devastating. We already have a drought in California, and this would really affect the crops in Canada and the U.S., and it's just something to keep an eye on. But if you watch that video, it's very interesting. I mean, the animals know that Yellowstone's a safety zone. They know that, they stay in Yellowstone because their survival rate's much higher. But yeah, these bison they're running away from Yellowstone.
Wow. You know where I think they're going is I think they're going to Wall Street to buy stock. That's my guess.
Well, they're full speed ahead.
You're really right about the animals. Benjamin Franklin, did the Farmer's Almanac, and there's so many things in there about how animals, react to this. Like when we have parts about drought and stuff. The gray squirrels don't have any coats, and there's things like that. It's really amazing.
Well,
but listen, would do me a favor, email me if you see more information on that, because I've really been watching it not that closely because I read too many of the Russian newspapers, but I do like to. I'm interested about that because that is one of the hottest volcanic spots in the world. It really is.
Oh, yes, it is. And how do I get your email address?
It's my name at gmail.com, Larry Pesavento at gmail.com. But don't give that out, Larry, okay? Because it's secret.
I will not. Mom's word.
All right, buddy, listen, thanks for calling in.
Bye.
Okay, we got our friend from Philadelphia. John, are you there?
Yeah,
Hey, Larry, since Swahili, Russian, Chinese.
Yeah, Chinese, and don't forget Botswana. I spent a lot of time in Botswana.
What's in the Tucson newspaper this morning?
The Tucson newspaper, I have no idea. I haven't read a newspaper in at least 40 years. Honest to God, I never really have.
That's terrific. Larry, I first have to congratulate you. You and I know you and your hedge fund partners had been trading wheat from the long side after the January bottom. Wheat has rallied strongly, as you know.
Yes.
Rallied a full $1.70 a bushel off the 550 low in January. My question, Larry, do you see any trade upcoming, either long or short, on this? I'm kind of at a loss with seeing what your eyes saw.
John, I really think you got to take a look at it, down about another 13 cents at the 382. And the reason for that is that this market came off with this big bottom like a rocket, and you don't have to risk much at 660 a bushel. Yeah. Because, risk about 8 to 10 cents at the very most, because the 382 should stop it spot on. But it's had a lot of power. This is the first really good correction we've had since way back in, early February. So that's what I'm watching is 660 in the wheat to, potentially buy it.
Gotcha. I appreciate that. When you're trading the wheat, Larry, the chart that you've just posted, and I thank you for that, is the Chicago wheat. That's the soft red winter wheat variety that's kind of grown in southern Illinois, sort of thing. Yes. Do you trade yourself the Kansas City contract or the Minneapolis contract?
John, I have never traded either one of those in all my history of trading. I've only been in Chicago wheat because, I was on the floor there in Chicago, and so I was always interested in that, and so that's really all I ever did.
Gotcha. Very good. One last thing I wanted to ask you is if today's close in the S&P is down, that makes yesterday's close at 1890 S&P cash the highest close off that February 5th low, and either 56 calendar days from that low or 39 trading days. From your perspective, is it a reasonable speculation to therefore put on a short with a stop just over Wednesday's high if in fact we get a lower close today?
I don't know how you could make a smaller risk than that. The other thing you could do, John, is wait till Friday, because if you have we end up having a down week, then you would have a weekly reversal, and that would put the probability of the trade, because you've had 8 straight weeks up, that would put the probability of the trade in about the 95% level if you wanted to wait till Friday. But, like today, if you do close lower, you put your stop above that high at 1890, and that would be correct. But the 56-day count that you posted into the Tiger room yesterday was just spot on. It was exactly like what happened in 2007. So, we'll see what happens with it. But you're correct. If we wait till Friday, that's the safest place. Because, first of all, if it does close lower on Friday and it's down on the week, you've got a weekly reversal after 8 weeks up. Those don't reverse very often.
No, that's a really excellent point. Yeah, I like that tactic.
Yeah.
Larry, thanks so much, and we certainly appreciate your time here.
All right, does it finally stop snowing in Philly?
Believe it or not, it has. Believe it or not, yes.
Record, you've never had that much snow in the history of Philadelphia. That's truly amazing, isn't it?
It is, but Larry, that it frankly doesn't compare, because in 2010, in the month of February, we in Philadelphia had 2 snowstorms within 6 days of each other, and each storm was over 2 feet, which was which was quite a challenge. So it's always fluky. You know how that goes. So
for sure.
Yes, Larry. Thanks again.
You bet. Thanks for calling in, my friend. I certainly appreciate it. Okay, we got one more call. Boy, today's call-in day. This is really good. Makes my job easy. Okay, we've got a caller from Atlanta, I believe. Charlie, are you there?
Yes, I'm here, Larry. How are you doing?
Thanks for waiting, my friend. What can I do for you?
I placed a short on Priceline 2 days ago, and I just placed another short today when it approached the 50-day moving average on the daily. I want to get your opinion, what you think of that move. What do you think?
Well, it's a very, very harmonic move, and the 2 days ago it hit the exact 50% retracement from the high. It hit it just about spot on, and that day that it made that spike high up at 1320, that was a 786 retracement. So that's the right thing to do. You're really fortunate here because all you really need to do is to put your stop at above today's high, because the profit objective on this particular trade, the risk reward on this now is really heavily weighted in your favor, that you could get a move, very easily down to the $100 lower from where we are right now. So you've got a 4-to-1 risk reward ratio on this. So, as long as it doesn't close in the upper part of the range today, and it's still quite early with 3 hours to go, it looks like it has a really strong probability of, heading down.
When you say $100, where do you project that number to be?
Okay, well, the exact number comes in at $1,118 a share. And all I'm doing is I'm taking the high from March the 19th, the low from March 26th, the high we made on April Fool's Day, and down to the low, which would project sometime around the 10th of April, around the 1118 level.
Okay, very good, Larry. I appreciate your help, and you really are helpful. Thank you.
Well, thank you very much, Charlie. I appreciate that.
Mm-hmm. Bye.
Okay. All right, folks. Okay, I wanted a little bit of a side note here. I have a really good friend of one of my students, happens to be a ex-Navy SEAL, if there is such a thing as an ex-Navy SEAL, and he chats with me every occasionally, and he told me something today that really absolutely astounded me. One of the most famous Navy SEALs we all know, but no one really knows he was a Navy SEAL, and the reason why is, if you remember Mr. Rogers, every day in the neighborhood. Well, Mr. Rogers was in one of the first classes of the Navy SEALs, and he always wore that sweater on the TV show because of all the tattoos that he had. But he was a real bad dude. I mean, he was one of the guys. He was also one of the instructors for the Navy SEALs before he got into television. And when he did that, he say, it's really amazing that he had. And that he did all those things. So that's it. All right, now let's get back to the futures market here. We just finished with Priceline. I wanted to talk about the Treasury bonds here because the bonds have held at some pretty significant levels here. And I'll put the chart in here in just 1 second, and we'll see where we are. I've got my eye on these metals because I'm a little skeptical that they might fail. I'm not sure. But I'm going to draw this line in on the bonds too because it's really important, because it's that declining tops pattern that Bill O'Neill uses at Investors Business Daily, and also it's the 135 triangle pattern, 135 pattern that Roy Longstreet uses. And as you can see, we're in a downtrend in the bonds, and it looks like we've had some support here right near the 618 at the 132 level. But it looks like these want to work lower. They just won't rally at all. From January, we had about a 3-week rally, and then we backed off over the next month and made a Gartley down there at the 130 level, and we've not been able to do much since that time. And it looks to me like, we've got higher rates coming, folks. It doesn't make any difference what the Federal Reserve is going to be doing. We have higher rates on the way. You can see it in a lot of different things. Mortgage rates over the past 5 or 6 months have gone on the 30-year bond have gone from 3.5 to 4.5. So that in itself is a 25% move, even though it's at a low level. Most of the mortgages that people have from years ago were down into the range of the 6 or 7% level. So these rates are still relatively low, but they are rising. And we've been in that 30-year bull market in interest rates. That ended when the bonds hit 155, 18 months ago. And that's a sign that when we had that, really bearish butterfly pattern that occurred, of course, it was different that time too. And we were right at that pattern. I'll put this in here so we remember, where we are. We've come down, and we've had a little bit of a bounce here off of the 61% retracement, but not very much at all. That tells us that interest rates look like they want to go higher without any trouble at all in some of these markets. So we must keep that, in our ideas to look at it. Okay, we got to take another little break here, and then we'll be back, and we want to talk about the grains.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, Market Scanner, and Trading Strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we're back, and the gentleman from Las Vegas, Larry, alerted us to this thing that's happening in Yellowstone. I saw a documentary on this about 3 months ago about the increased activity that they've had in Yellowstone, and it is one of the top 3 spots in the world that could really cause big problems. And if the animals are in fact leaving, they have such a tremendous sensitivity to these things that it's really we really ought to keep our eye on it. The problem is if that thing does blow, that would make Mount St. Helens look very almost like nothing. That was 1980. I remember when that blew. We could see it getting ready to blow, of course, because the snow was melting, and I was at Drexel at the time, and we were buying corn and soybeans, ahead of that, because we knew that cloud would really cause big problems with the crops. And in fact, we had some really poor crops for 2 years just because of Mount St. Helens. However, if something would happen to Yellowstone, man, you'd want to have canned goods, because it'd be really hard to find any food at all, because it'd take pretty much all of the western United States and Midwestern crops. That would really be something bad. I hope that's not what it is on the 21st, 22nd. I don't know. All I know is that we've never seen anything like this in recorded history, but it's going to be big. I mean, this is one of the largest energy forces that we've seen we've never seen anything like this. So this is going to be really interesting. I don't know if it means much or not, but they've got a new movie out called Noah, about Noah's Ark, and so maybe it'll be a flood. I don't know. Maybe it'll be nothing. The last time I did one of these things was in '89, and it was the fall of the Berlin Wall. Maybe Putin and Obama will kiss and make up. I don't know. All I know is something big's going to happen. Whether it has anything to do with the markets or not, we'll have to wait and see. Now, I'm posting a chart here of Christmas corn. That's the corn that is for next year. That's the one that is being planted right about now. It's only about 20 cents off its bottom, $1,000. And, we're going to have some crop scares. One of the things that you might want to look at is to buy, something like a $5 call in December corn. It'll probably cost you about $1,000 would be my guess, but at least you'd have, 5,000 bushels of corn that you could store for yourself, if something really crazy happened. But, we've never had a year in the grains where we haven't had at least 1 or 2 crop scares. That happens every year, folks. That's just like Mother God and country. But, the fact, the market has, bounced off just a little bit here. I don't believe this. I have really bad data here, folks. I really apologize for this. Let me see if I can get this thing working right. Shucks. Please disregard that chart on the December corn. It is wrong. It's last year's corn. It's December of 2013, and it's totally wrong. So please disregard that. Let me see if I can get. Oh, that's a bad sign. I think old age is creeping in a little faster than I originally wanted it to. Oh boy. Holy cow. I don't know if I can get this thing in here in time to finish the show. Maybe we can. Hold on just a second here. Because I know corn's rallied a heck of a lot more than that. Oh boy. I'm not able to get it in here, but there we go. Just a second and we'll be able to see. We've rallied over $3,000, so corn has had a heck of a move. I certainly apologize for that. And you'll see that if we get any type of a back off in corn, I would really be looking to be a buyer. So far, we've stopped at the 61% retracement. That's it, boys and girls. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.